Good morning, hunters, and welcome back to the Daily Hunt for Multibaggers. It's Tuesday, May 12th, 2026, and we've got a packed show for you, diving deep into yesterday's market chatter from May 11th.
That's right, Ethan. Our AI has flagged a significant number of social media discussions covering a wide array of stocks. We're seeing a really interesting mix of promising growth opportunities, especially in the AI and space sectors, but also a fair bit of underlying caution about valuations and profitability. It's definitely a day for careful analysis.
Let's jump right into it, starting with AST Space Mobile Inc., ASTS. Now, the community sentiment, it was pretty bullish pre-earnings, with talk of going to the moon. But the actual earnings report seemed to dampen spirits. Dampen spirits is an understatement, Ethan. The overall assessment is decidedly bearish. We saw comments like, narrator, it did not pop on earnings, and even direct reports of losses. Our KPIs show negative earnings per share at minus 1.34 and a net profit margin of 0. Plus, insider trades over the last 6 months show a significant net selling of over 4 million shares. That's a huge red flag. This one was rated stay away and speculative gamble often in the past, and it's staying right there.
Yeah, those insider sales are tough to ignore, even with the long-term potential of the satellite business.
Precisely. Our verdict on ASTS is stay away.
Next up, Nokia Corporation, NOK. Users are buzzing about some serious recent gains, with one even mentioning a 134% return. It sounds like a rally is just getting started for them.
Well, the user sentiment is indeed highly bullish, celebrating those gains. But let's look at the numbers, Ethan. The PE ratio is an astronomical 81.88, and the debt to equity is 15.63. While a partnership with Cinia for DDoS protection sounds good, a single deal isn't going to fix those underlying financial risks. We've had it as a buy or cautious buy recently, but those KPIs are screaming caution.
So the recent excitement might be just that, excitement, rather than a strong foundation for new money.
For new investment, especially for value-focused investors, our verdict on NOK is stay away. That's a downgrade from its previous positive ratings.
Let's move on to Microsoft Corporation, MSFT. Despite some users worrying about portfolio concentration, the long-term outlook is quite bullish, driven heavily by their strong AI strategy and investments. Users are talking about $520 plus easy and a bull run of the century thanks to AI.
You're right, Ethan. The sentiment leans slightly bullish, especially for the long term. And when we check the KPIs, it's a different story than Nokia. Revenue growth is a robust 18.3%, and the net profit margin is nearly 40%. Even with a PE of 24.56, the PEG ratio of 1.29 suggests a reasonable valuation for that kind of growth. The news confirms their AI pivot, and frankly, these numbers show why it's a consistent buy for us.
Exactly. The strong fundamentals support that long-term vision.
Our verdict on MSFT is a buy.
Now for Intuitive Machines, LUNR. This one has users pretty excited, talking about hitting ATH today and significant gains for early investors. Plus, that NASA lunar deal is huge for their future.
It's true. The sentiment is strongly bullish, fueled by the stock near its 52-week high and a B. Riley price target increase to $40. However, the company currently has negative revenue growth, net profit margin, and EPS. Their debt-to-equity ratio is a very high 182.698. The news about the NASA deal is definitely a game changer for future revenue. Crucially, though, we're seeing net insider purchases, which is a strong vote of confidence from within. This has often been a stay away or speculative gamble for us.
That insider buying, coupled with the NASA deal's future revenue potential, could really turn those profitability KPIs around.
Yes, the potential for KPI improvement from those contracts is significant, so our verdict for LUNR is a buy, marking a notable upgrade. Moving on to HUT Corp, HUT. This company is getting a lot of attention as a successful pivot from crypto mining to AI data centers. Users are celebrating massive run-ups and touting huge hyperscaler deals. The sentiment is indeed bullish, Ethan, calling it an asymmetric AI infrastructure play with multi-billion-dollar leases. And the stock has had massive run-ups, near its 52-week high. But let's be clear, net profit margin is still negative at minus 1.1%, and EPS is minus 2.82. While the $9.7 billion hyperscaler deal is exciting and could drive future growth, they aren't profitable yet. It was a stay away for us previously.
So it's all about the execution on those big deals to turn those red numbers green.
Precisely. The potential for future KPI improvement is there, but the current unprofitability adds risk. Our verdict for Hut is a cautious buy, which is an upgrade based on that strong pivot. Let's talk about Nebulous Group, NBI. It's being used as a benchmark for other AI data center plays, with users noting its massive run-ups and being further ahead in the space. The implied sentiment is slightly bullish as a success story, but the KPIs are alarming. The PE ratio is an insane 4,652.50, and their operating margin is negative. While they have an NVIDIA-funded AI pivot and mega partnerships in the news, the current EPS is a paltry 0.04. Plus, we're seeing net insider selling. This one has largely been a stay away for us.
That PE is certainly a sticker shock, suggesting future growth is priced in to an extreme degree.
Absolutely. Our verdict on NBI is stay away.
Now, Intel Corporation, INTC. There's chatter about it reaching new all-time highs and comparing favorably to NVIDIA after a huge run. One user even said Intel and AMD took me to $200,000.
While we acknowledge the astounding run and insider purchases is a positive, the dominant sentiment in the comments is concern over a market bubble, with many users taking profits. Fundamentally, Intel has negative net profit margin and EPS. Their debt-to-equity ratio is also very high at 36.028, and the price-to-book is 5.66. Yes, new products with NVIDIA and a potential Apple deal are good, but until profitability turns around, that high valuation is risky. We've had mixed ratings, including buy previously.
Those market bubble concerns are definitely weighing on investor confidence, despite some positive developments.
Indeed, our verdict on INTC is stay away, a downgrade from some of its recent ratings. Next up, Tesla Inc., TSLA. We saw a post about a 0 DTE options trade turning 5K into 150K. That's quite a story. Plus, the robotaxi rollout and China sales look promising. That options trade was pure luck, Ethan. Even the original poster admitted it was a casino win and not replicable. The PE ratio for TSLA is still an astronomical 415.89, and the debt-to-equity ratio is 18.738. A high beta of 1.793 confirms its extreme volatility. While robotaxi and Optimus have massive long-term potential and China sales are up, these future catalysts are already heavily priced into that sky-high valuation. Tesla has been a consistent stay away for us.
It certainly sounds like the risk-reward for new money is heavily skewed.
Precisely. Our verdict on TSLA is stay away.
Let's talk about Poet Technologies, Inc., POET. Users are celebrating one-year gains and believing in a genius CEO with visionary patents in photonics, expecting it to keep going up.
That bullish sentiment is undeniable, Ethan, with comments about the optical interposer being a game changer. And news shows the stock skyrocketing, even with canceled orders and lawsuits, suggesting strong belief in that future potential. However, Poet is currently unprofitable, with negative EPS and net profit margin. The price-to-book ratio is very high at nearly 10. While those visionary patents could lead to improved KPIs in the future, it's a highly speculative bet right now. This one has consistently been a stay-away or speculative gamble for us.
So it's a high-stakes play on future tech rather than current financial strength.
Exactly. Our verdict on Poet is stay away.
Now for Micron Technology, Inc., MU. We've seen multiple posts about MU, all showing strong bullish sentiment, with users targeting $1,000 to $2,000. Everyone's talking about the AI supercycle and strong demand for AI memory.
The market sentiment for MU is indeed overwhelmingly bullish, citing its hot streak and AI memory demand. Fundamentally, the company boasts an exceptionally low PEG ratio of 0.26, and that profit margin of over 41%, and an operating margin over 67%. These are incredible numbers, and they show genuine earnings power. But Ethan, we've also seen significant net insider selling over the last 6 months, over 180,000 shares. That's a point of caution, especially with the stock near its 52-week high.
It's a classic battle, isn't it? Strong growth in fundamentals versus insiders taking some profits. But those core performance indicators, the PEG ratio especially, are hard to ignore if you're looking for growth.
I agree the growth potential is undeniable. We've consistently rated MU as a buy or cautious buy. But that insider selling means we have to be prudent. Our verdict on MU is a buy.
Now for Reddit Inc., RDDT. The user sentiment is bullish, with RDDT gains and the poster saying it's just getting started.
The enthusiasm is there, and the KPIs support it. Revenue growth is an exceptional 69.1%, and net profit margin is a healthy 28.6%. A PE of 45.70 is high, but with that kind of growth, it's understandable. What's really compelling, though, is the significant net insider buying, 11.4% of total insider shares purchased. That's a strong vote of confidence from within. This has been mixed, but often stay away for us.
That insider buying is a powerful signal, suggesting they see strong future upside.
It is. Our verdict on RDDT is a buy, which is a solid upgrade.
Finally, let's discuss Rocket Lab Corporation, RKLB. Users are reporting gains of 1.2 million, calling it here to stay with so many catalysts still to come, and predicting it will hit $1,000 in 5 years.
The community is incredibly bullish, Ethan, celebrating massive past returns and future potential like Golden Dome contracts. And the news does show record revenue, a strong Q2 outlook, and analysts lifting price targets. However, the company is still unprofitable, with negative net profit margin and EPS. The price-to-book ratio is an extreme 37.04. And here's the kicker. We're seeing significant net insider selling, over 3.6 million shares, representing a staggering 71.64% of total insider holdings over the last 6 months. This has generally been a stay away or a speculative gamble for us.
Wow, that insider selling is a major point of concern, even with all the excitement and growth prospects.
It's a stark contrast, Ethan. The market is pricing in enormous future success, but the fundamentals aren't there yet, and insiders are cashing out. Our verdict on RKLB is stay away.
All right, Brooke, let's round up today's candidates for deeper analysis. Investigate as buy, Microsoft Corporation, Intuitive Machines Inc., Micron Technology Inc., Reddit Inc. Investigate as cautious buy, Hut 8 Corporation. Investigate as speculative gamble, Nokia Corporation.
And that wraps up another episode of the Daily Hunt for Multi-Backers.
Just a reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in, everyone.
We'll catch you next time on The Daily Hunt.